India is planning a major change in how multinational companies are taxed. If implemented, this could reduce tax disputes, change profit allocation, and impact global giants operating in India. Today, when multinational companies like tech pharma or service giants do business in India, the biggest tax question is how much profit should be taxed in India. Currently, this is determined through transfer pricing rules, profit attribution to permanent establishment, subjective assessment by tax officers. Because of this system relies heavily on interpretation, it has led to years of litigation, high value tax disputes, and uncertainty for investors. The core problem is different countries want to tax the same profit. India says value is created here. The MNC says profit belongs to the parent company abroad. This results in double taxation risk, long court battles, difficulty in doing business. Even genuine businesses get stuck in litigation. What is the proposed change? To solve this, the CBDT is examining a proposal by an expert panel to move forward a formula-based profit attribution method. Instead of subjective judgment, profit would be allocated using objective parameters such as sales or revenue from India, number of users or customers in India, assets or employees located in India. This means profit will be split using fixed formula, not discretion. The proposal is not happening in isolation globally. OECD's BEPS project, number 2, Pillar 1 and Pillar 2 reforms, minimum global tax rules, all aim to ensure multinational companies pay tax where value is created. For MNCs, this change could mean greater tax certainty, fewer disputes and litigation, faster assessment. However, some companies, especially digital and consumer facing businesses, may see higher profit allocation to India, leading to higher tax outflow. It is a move from litigation based taxation to rule based taxation. In simple terms, India wants to tax multinational companies fairly, transparently, and consistently without endless disputes. If implemented carefully, this reform could be a game changer for international taxation in India. If you want simple explanation of complex tax laws, follow for more. This is CA and Insolvency Professional Praveen Agrawal thanking you for watching. I hope this episode will be helpful for you. Subscribe for more such videos. Thank you.